Hello everyone. This is the pre-market report video for today, 25th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, yesterday in the pre-market regarding the SEBI's new F&O stats about the retail traders are not making money, I said it's hard to believe. And based on the comment section, it looks like that was taken as very offensive, that I'm encouraging the people to do F&O trade kind of. Honestly, I didn't mean to encourage anybody to trade in F&O. Apologies if somebody took that in that way means, and it was not my intention. I do realize the risk associated with it. I mean, always polling is the very fun exercise in any sector, and I do like very much to answer the poll. So only I mentioned it like to encourage the people to vote. Anyway, I promised to share the results. Around 3,200 people voted as per our polling. 36% of the people said they made profit this year and 63% said they have made the loss. So here we go, that's the results. Now coming to our regular stuff. Yesterday early morning, Chinese central bank cuts its short-term interest rate by 10 basis points to 1.85%. And on top of that, Chinese government announced the biggest stimulus since the pandemic to support the economy and to fix particularly the property sector. I mean, if the Chinese property sector started to recover means, then China will not dump their cheap steel in India, so domestic companies' steel demand expects to increase. Hence, Indian metal stocks led the rally. So, top 2 out of 5 Nifty positive contributors were metals and the whole sector increased 3%. Then, barring metal, energy, IT, auto and pharma supported the market by increasing mildly around 0.5%. That was counterbalanced by negativity for similar level in the PSU Bank, FMCG and other financial stocks. FII wise, I like to highlight this important report which was released yesterday in the Bloomberg. At present in our derivative market, FIIs are holding the open position worth for 124 billion US dollars. In Indian money, it's roughly equal to 10 lakh crore rupees. This is really very huge. And please look at the bottom graph. I mean, before 3 months on an average, FII long index future used to be between 0.1 to 0.2 million contract. That in the last 3 months, it increased to 0.5 million contract, which is nothing but in the Indian numbering system, it's 5 lakh contracts. And at the end of Monday, FII was holding near long on 5,40,000 index future contracts, which is massive. As we discussed in the last couple of videos, at present, FII is holding 3/4 of the long index future in Nifty and around 1/4 on the Bank Nifty. Please remember that will come in a moment. Then coming to yesterday's option trade value, in the index side, FII net sold for 26,000 crore rupees. So combining all, we can see this kind of trade pattern happened in 3 instances where FII exhibited the same behavior. September month 2023, March 2024 and May 2024. And on all that instances, on the Wednesday during Bank Nifty expiry, Nifty's price action was always flat to negative behavior. Then on the following Nifty expiry day, based on FII activities, market behaved differently. If FII in the option market net bought means, most probably tomorrow market will open negative and might consolidate. But suppose in the option market, if FII sell heavily today means there is a chance for upside breakout tomorrow. Here please note, I'm just highlighting the past similarities and I can be completely wrong. Disclaimer, it's not a recommendation. Please don't make investment decision based on this. Anyway, back to FII data. In the cash market, FII net sold for approximately 2,800 crore rupees and DIA net bought for 3,900 crore rupees. One more thing, one of the viewers in the comment section requested the put call ratio details. Here we go. Please pause and have a look. Compared to Monday close, FII short put call ratio decreased, but still they have very high long and short PCR, which looks not sustainable. Hence, possibly they might close some today. So those were the quick takeaway from yesterday's Indian market. Then coming to US, first before their market opening, US government released the housing inflation. On month-on-month basis, US house price index increased by only 0.1%. compared to the expectation of 0.2%. And in addition, very important, CB consumer confidence level had a biggest 1 month drop in the last 3 years. I mean, as per their report, US consumers were very much worried for inflation and economy. The data came around 105.6 on the August month, which dropped now to just 98.7 in the September month, which in turn made the CME Fed Watch tool to predict 56% chance that Fed cut the interest rate by another 50 basis point in the upcoming November month FOMC meeting. Hence, it made all three major index to close positive. At the end of the day, last night, Dow Jones up by 0.2%, S&P 500 increased 0.25% and Nasdaq up by 0.57%. In case of US VIX, it decreased 3% and moved near 14.3. Here, please note, US market closed positive, but this level of drop in the consumer board confidence data, to some extent, it now increased the recession fear. So possibly future market might react negative during our trading time. Then regarding oil price, now this China stimulus package expects to increase the demand, so the price increased by near almost 2%. At the time of this video, WTI crude trading near to $71.5 US per barrel, and last night Brent crude traded near to $74.5 US per barrel. Coming to Indian ADR, if required, please pause it. It closed in line with Indian market. HDFC Bank, Wipro increased, whereas ICICI Bank and Infosys decreased marginally. No fresh movement indication. About GIFT Nifty, at present 3 AM Indian Standard Time, it closed near to the lowest point for the day, 25,929 mark, and at present the premium is negative 10 to 20 points for the spot market. So it's indicating 20 to 50 points gap down opening. As a summary, US market was okay, closed positive, but the global momentum deteriorated. So does the GIFT Nifty, indicating a gap down of 20 to 50 points. Please remember, today is Bank Nifty monthly and future market expiry. Then as per stock open interest, RBL Bank, Divi's Lab, India Mart, ACX, IEX, Cipla and Page Industries got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Power Grid, Hindalco, Jindal Steel, Marico and HFC AMC got an increase in open interest with a positive price close, which means these stocks got the long build-up. Regarding the things to look out, again it will be a quiet day apart from the negative global momentum. Only in the night for US, durable goods order, new home sales and crude oil inventory data are the important things we need to keep an eye out today. Coming to technical, Nifty opened 20 points gap down. However, it managed to cross 26,000 mark but could not sustain those gains due to profit booking and ended at below 26,000. So basically, after 3 days of rally, yesterday Nifty traded within a narrow range. Thus on the daily chart, Nifty formed a small bodied green candlestick pattern with an upper shadow, which indicating the selling pressure at higher level. However, it also maintained a higher higher low formation for the 4th consecutive day. Hence, the short-term sentiment is still positive, but for the rally to continue, Nifty must decisively break above 26,000 level. Until then, we can expect a range-bound movement with Nifty fluctuating between 25,800 and 26,000 over the next few hours to a few days. In case of Bank Nifty, it snapped its 8-day positive close and closed below 54,000 mark. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern with above average volume. However, the higher low formation continued for the 9th consecutive session. Hence, Bank Nifty wise, it must hold above 53,750 zone to initiate an upward move towards 54,250 and then 54,750 level. On the downside, support has shifted higher to 53,750 followed by 53,500. Regarding the monthly options data, the maximum call option open interest was at 27,000 strike followed by 26,000 and 26,500 with maximum new call option writing at 26,000 strike followed by 27,000 and 26,300. On the put side, the maximum open interest was at 25,000 strike followed by 25,500 and 25,900 with maximum new put option writing at 25,900 strike and then 26,000 and 25,000. Thus, from options data, it indicates that 26,000 is likely to remain as a key hurdle for Nifty, while support is at 25,500. So that's all in this video. Hope you all got some useful information. please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.